Long-term capital gains tax 2018. This video has all the details you need to know about long-term capital gains. So in this video, let's see the following points. What is a capital asset? What is a capital asset when it comes to share markets or mutual funds? What is a long-term capital asset? What is a long-term capital gains tax that is implemented in 2018? How does this long-term capital gains tax is applied, and how this new law affects the investors and the markets? We have some examples that tell us what the capital assets are. Land, building, house, property, vehicles, patents, trademarks, leasehold rights, machinery, and jewelry. These are some of the examples of capital assets. If we hold these assets for more than 36 months, then these assets are considered as long-term capital assets. If we hold them for any period lesser than 36 months, then these assets are considered as short-term capital assets. When it comes to share markets or mutual funds, what does a capital asset mean? Any asset that we buy or sell and that transaction involves the securities transaction tax, then the following rules apply. The items which come under these taxes are equity shares and preferential shares, securities like bonds, debentures, government securities, UTI bonds, equity-oriented mutual funds. Any of these assets that we buy or sell and which we hold for more than 12 months, then these assets are considered as long-term capital assets. If we hold these assets for less than 12 months, then the assets are called short-term capital assets. So how is a long-term capital gain calculated? Let us see this through an example. Suppose we buy Infosys shares for Rs 3,000 on March 2016, and we hold the shares for a period of more than 12 months till and beyond March 2017. Then this set of shares becomes long-term capital assets. If we sell these shares at Rs 4,000 on April 2017, we make a profit of Rs 1,000 per share. This Rs 1,000 is our long-term capital gain. How is the long-term capital gains tax calculated? Let's see a little bit of history. This tax was scrapped in 2004-2005 by the then Finance Minister P. Chidambaram. This tax has been reintroduced in the Union Budget 2017 by the current Finance Minister Mr. Arun Jaitley. The new tax comes into effect from 1st April 2018. The long-term capital gains tax is set at 10%. The exemption limit for long-term capital gains tax is Rs 1 lakh. Let us see how this tax is calculated. If we have had 3,000 shares of Infosys for like 2 years, we'll try to find out how to calculate the long-term capital gains tax. Let us say we purchased it for 2,000 rupees. The closing price of this share as of January 31st, 2018 is Rs 2,500. We sell the share on April 2nd, 2018 at Rs 3,000. Now, our profit is basically the selling price minus the purchase price, which is 3,000 rupees minus 2,000 rupees, which is 1,000. However, government has set a base period, January 31st, 2018. So the price that we should take into consideration for calculating long-term capital gains is either the purchase price or the closing price of a particular share or mutual fund as of January 31st, 2018, whichever is higher. So in this case, the price of Infosys on January 31st, 2018 is 2,500 rupees. So we should take this as the base price. So long-term capital gains for this particular share is 3,000 rupees minus 2,500. The gain is Rs 500 per share. We have 3,000 shares. The total gains for 3,000 share is Rs 1,50,000. The exemption limit for long-term capital gains is Rs 1 lakh. The taxable amount is 50,000, and when we apply a tax rate of 10%, it is 5,000 rupees. So the long-term capital gain for 3,000 shares of Infosys in this example is rupees 5,000. How does it affect the market and the investors? Well, as you have seen, investors have to pay tax on long-term capital gains. Exemption limit is set at rupees 1 lakh. The long-term capital gains tax rate is set at 10%. The short-term capital gains tax rate is set at 15%. The difference is only 5%. The incentive for investors to hold the asset for a longer period of time is less. Investors would try to book profits whenever they have an opportunity. This is likely to improve the liquidity in markets. So our take is that whenever you see profits in your investments, try to book them. Thank you for watching this video. We hope this video was helpful in understanding how long-term capital gains tax is calculated. Please do subscribe, and for any further assistance with your investments or trying to calculate your long-term capital gains tax, please do contact us. Thanks for watching this video.